All right, people are still dropping in, but I think we can get started. Thank you everyone for joining and welcome to this online webinar hosted by Climeworks, exploring the insurance industry together with carbon removal, scaling carbon removal, the critical role of the insurance industry. Exciting collaborations going on where insurance can play a role both as a buyer but and also on other sides. So it's a special industry that we'll be exploring here today with Laurent Müller from Climeworks and Mischa Repmann from Swiss Re. My name is Robert Höglund. I'm a climate advisor focusing on carbon removal, writing a lot about that from different perspectives, tracking all the known purchases, for example, on CDR.FYI. You can see that Climeworks is a leading seller of direct air capture, and Swiss Re is one of the big buyers. I also work with carbon removal on the financing side, managing a charitable fund called the Milkwire Climate Transformation Fund, which supports durable carbon removal projects, among other things. And Climeworks are one of the projects that we supported. So we're going to have a discussion with Laurent and Mischa, and we're looking forward to questions from the audience. We actually already got some questions through the sign up, but we'll be using the Q&A box for the questions during the webinar. So please write your questions as they come. You can start right away. And the last 15 minutes will be for questions. So that's at past. So we'll just start with a brief introduction from our participants here, starting with Laurent and then Mischa.
Thank you for the introduction, Robert. My name is Laurent Müller. I have the pleasure to represent Climeworks today in this webinar. My position at Climeworks is that I'm in charge of the corporate partnerships, so helping companies, corporates to achieve their climate goal thanks to carbon dioxide removal from Climeworks.
And I'm Mischa. Thanks, Robert, for the intro. I'm Mischa, working for Swiss Re. I'm in the risk management team by now, but I started at Swiss Re in the operational team, where we have designed this do our best to remove the rest strategy to get Swiss Re operations to net zero.
Great. So I think a lot of people in the audience know about the collaboration that Climeworks and Swiss Re have, and we'll hear more about the details of this long-term agreement of as a buyer of carbon removal. But we're really curious, Mischa, like why are we having this webinar? What's special with the insurance industry and permanent carbon removal? What are different ways that you view it from? Like, what's the business case? How are you engaging? Like, what are the different aspects that's interesting when we're talking about CDR and insurance?
Yeah, thanks, Robert. And it's a bit a set game. Okay, so I prepared a couple of slides in order to make this this excursion a bit more easy to digest. So let me share my screen. Here we go. I hope you can see that. Does it work?
It's coming. Yeah. Now
Excellent. So ask about the role of the insurance industry in scaling removals. It's three things. And that all bears the theory of change that I've always now at Swiss Re worked under. The first is to de-risk. Okay, so an insurer can de-risk. We can do long-term offtake agreements. That's a sort of de-risking, but we can do the classical covers, insurance covers, property covers, engineering, in order to build the plants, and also a bit more novel things like climate liability, storage reversal covers. But we can get there. That's the de-risking piece. The middle thing here is the financing piece. So we can invest in suppliers. We can do project finance, not so much as an institutional investor as like a bank or something, but I just wanted to listen here for the sake of completeness, other contributions like grants, research through foundations. So that's how we can spur finance. And then the third, obviously, that's buying the green services, buying the removal services. We can realize that within our own value chain, if we happen to have removal potential in the own value chain, that's not what insurance can do. But again, for sake of completeness, I listed here. What insurers can do is we can buy carbon removal services. And that's, as I mentioned, the theory of change. Swiss Re can do all three of them in parallel perfectly. And the whole insurance industry can do that. Other industries aren't that well positioned. They can maybe do buying, maybe do a bit of investing, but we can really do all the three. Now, This buy, finance, de-risk translates for an insurance company to our own operations. That's where we can do buying of removal services. To the asset management side, as an institutional investor, that's where finance sits. And the de-risking obviously is through our underwriting business. Direct insurance products, reinsurance products. And we have committed basically group-wide to net zero in 2019. And that's how we want to get there. In operations, a bit earlier than 2050, you don't have to wait so long. We have a comparably small operational footprint. And we can do meaningful things there much sooner. The program that we've conceived there is the CO2 net zero program, the Do Our Best, Remove the Rest program. On the asset management side, we're co-founder of the Net Zero Asset Owner Alliance, and on the insurance side, we are co-founder of the Net Zero Insurance Alliance. That brings us to net zero by 2050. We have to first, define standards, how to measure finance emissions and insurance-associated emissions, and then also target-setting protocols. What climate targets do we set ourselves as an industry? Now, if we go to the new removal market and engage early in removals or in any climate solutions, we as Swiss Re become a credible partner, an off-taker of that service. And then we can bring our investors, our asset managers, and our underwriters to the same table and help them accessing the new investments, new asset classes, and new risk pools. So that's how we could make it interesting to start something from operations that has though a big ripple effect into the business, and that eventually sparked interest of the management. Putting that theory to work, that's the Climeworks case, obviously. We chose Climeworks back then because it was the gold standard of CDR. It was the only company who could really offer already a prospect of the full value chain. Because the Orca plant, you see the row down there, was really about to be built, so we knew that's coming. And therefore, Climeworks was the obvious partner. We, for months discussed a long-term off-taking agreement. As a CRPA, a CERPA, as we call it, like a PPA, a power purchase agreement, worth $10 million over 10 years. And just like a PPA, that's how we thought is a meaningful way to help as a buyer, send the market a strong signal that we're willing to provide future revenue stream to a supplier like Climeworks, so that this contract can be taken to a lender and the next scaling up step can be financed a bit more easily than in the absence of such future client commitments from a creditworthy off-taker. A couple of these contracts followed once it was released by other clients. I heard even saying people that they want the same like Swiss Re did, so that was really good and a bit also the intention. And not long after, there was this gigantic equity funding round with $650 million raised by Climeworks. And Swiss Re participated. So there was the second tick in this theory of change. We can become off-takers, we can become investors. Currently, we're still working on how to become insurers, because that is a bit of a different animal and much more difficult, and probably also why some of you have joined this webinar today. So Robert, if you allow me, I would have a slide or even 2 or 3 to go into each, the buy, the finance, and the de-risk a bit more in detail. Okay?
Yeah, go ahead, please.
So on the de-risking side, and this is a figure from the Insurance Rationale for Carbon Removal Solutions report that came out last year. Google that. You'll find it Swiss Re Carbon Removal pretty soon. You'll find this report where we go a bit more in detail what that means. It has one figure that shows you the value chain of removals and simply split between nature-based solutions and technological solutions, and process-wise between capture, processing, transport, and storage steps. So we start nature-based solutions with planting trees, land management. Biomass is the flux that emerges. That can either be just let there and the storage is imminent and we just have to make sure that the trees, for example, stand, or we process the biomass further. And then we have timber, biochar that can be used, stored eventually in buildings, soils, materials. So that's these 2 streams here. The technological start with direct air capture. And either this goes straight into the deep underground for storage, geological storage, where eventually also mineralization takes place of that CO2, or we take the CO2 and convert it to long-lived products, which again can be taken to buildings as materials, etc. That's a use case of that air captured CO2. And there is this famous shortcut where we go from biomass after the burning of the biomass with the CO2 and can go a conversion or a storage route that's bioenergy and CCS. So now showing these to my underwriting colleagues, I had to kind of wake up or give them an impression. This is not rocket science and brand new. There are industries for all these processes and fluxes that resemble things that you've already done, that you've already underwritten. So don't be scared was kind of the message of this figure. And at least just as a bullet point here, the various industries that come to mind, the chemical industry for CO2 conversion, for example. I then also listed the key insurance opportunities for all these processes. That goes from property to casualty covers to credit and surety, engineering covers, marine in transport, and so on and so forth. Just to show, hey, a lot of is already there. And the green, amber, red scale showed, how mature these insurance products are. It's a rough estimate, but I think it helped to say, hey, there is only one real novelty here, which is stored carbon in the end. And eventually, what do we do with stored carbon? Are we in the position to place insurance products for that climate liability or the claims liability? Because, if carbon removal services is bought, this is done in order to make a claim, net zero, or I've compensated that much emissions. And this needs to be substantiated ever after. And you can do that with the Climeworks technology by saying, hey, that stuff stays mineralized, nature has shown it, but there are other cases for removals where this is not so obvious. So that's where see the red things going on there. That's the insurance picture, really, really high level. So there is a lot of stuff that we can already insure, but a couple of things are truly novel. And you'll find that in this report here, as mentioned, the insurance rationale for carbon removal solutions. The finance piece, there's not so much to say. Investors are reluctant towards new technologies. There are technical risks. There are commercial and market risks. Are there buyers of that? Marketplaces, and political and social risk, of course. Is this wanted and regulated at some point? Insurance can play a role in the technical risk space mainly here. Okay. And then on the buying side, just very shortly on the Swiss Re strategy of purchasing removals, why we purchase and how we purchase removals. We've been climate neutral in the past, and that meant that we bought for the emissions that take place, that you see here, an equivalent amount of carbon avoidance certificates, offsets. So the same amount of our emissions was prevented to go to the atmosphere again. And we could call ourselves climate neutral already since 2003. In the future, we want to stay climate neutral, basically. That means stay climate neutral and go to net zero. That means that we have to phase in removals. That's the blue area that you see, that we have to continue reducing our emissions. Otherwise, this will be freaking expensive. Excuse my French, but we can't continue like that and pay a very high price for removals. And we did that with flight targets and whatever. But in order to stay climate neutral and transition to net zero, we also continue to purchase very high quality carbon avoidance certificates. Also for the fact that they are much cheaper than these high quality removals currently. So we committed in the first year to 10% removals and 90% of these offsets in our compensation mix. And we had a certain funding available for that. By 2025, we have a 50-50 split. So 50% offsets, 50% removals. And by 2030, by definition, we can't have any avoidance offsets anymore and have to have 100% removals. The funding scheme I mentioned is our carbon steering levy. And we introduced it at $100 last year. It's already $112 now. It's good to notch a little bit every year. It's becoming more expensive. And you have to really reduce, otherwise you pay more carbon levy. And by 2030, that has increased to $200. We think that is enough in 2030 to then source 100% of our offsets of our carbon removal certificates from removals. So that's a bit the picture of what an insurer can do and why we believe actually real insurance is perfectly positioned, not only for carbon removal, but for actually any climate solution.
That's super interesting. And I love that you have a report as well that people can go and read more in detail. And it's really admirable that you're putting all the information out there, how you've been reasoning and how you use your tax, etc. So Laurent, we're wondering a little bit like what is it that Swiss Re bought from you? Maybe you can say a few more words about what Climeworks is doing, and also what did it mean for you that this agreement came to fruition?
Of course, with pleasure. And as you propose, I would start by setting a bit the scene of the direct air capture industry, and by asking this question: why do we need direct air capture, or in general, why do we need technical carbon dioxide removal? We have a Paris Agreement that is existing with a clear targets, and we know that we need to do at least two things to reach this target. The first thing is, of course, to very aggressively reduce our emissions. That's the first priority. We know also that just by reducing, we will not reach the targets of the Paris Agreement. So we will need large amounts of removals. In the future, the IPCC is telling us between 5 and 15 billion tons of CO2 will have to be removed yearly from 2050 onwards. And this quantity will just increase in the second half of the century. So 5 to 15 billion tons is an extremely high volume that we need to extract each year from the atmosphere. The nature can help us. Nature-based solution can, of course, contribute to these negative emissions, but it will not be enough. Probably the majority of the negative emissions will have to come from technical solutions. And in order to have those volumes available from technical solutions by 2050, it's very important to start early with the development and the scale up of those solutions. It will take time to scale up. We speak about large facilities, we speak about complex industrial processes, and we'll need years to scale up and to reduce the cost of our industry. And that's why it's so important to start early, to give us actually the time we need to come to the order of magnitude we have for 2050. And that's exactly what Swiss Re has understood, I think, before a lot of other companies, and is helping a lot by everything that has been explained before by Mischa. Perhaps a few words about Climeworks before answering the question of what did the Swiss Re deal bring to Climeworks. So we are a direct air capture company, as you know. What is nice with direct air capture is that you can place our plants more or less everywhere, since the CO2 concentration is more or less the same around the world. We will go to places where we will have energy, renewable energy, and we will have storage sites mainly. Direct air capture is also recognized as one of the most scalable solutions around the CDR technical solutions that we see today. And that's very important because it's important that the money goes now in the development of solutions that can be developed and deployed to the gigaton scale. So the scalability of solutions should be really on the radar when a company decides to support a solution. On the base of our plans and of the subsequent storage, we sell or we develop a carbon dioxide removal solution that we offer to corporates. What are the key attributes of the carbon dioxide removal that we are offering to those companies? It's mainly its very high level of quality. So we have a carbon dioxide removal, which is really fully additional, of course, which is permanent. We use mineralization, a storage process in Iceland, for instance, very deep in the underground. The CO2 is injected and is then stored through a mineralization process. It's measurable. We can measure very precisely the quantity of CO2 which is captured and then which is injected underground. And finally, it's really safe. The probability of reversal event is very low, and that makes that it's a low risk solution. So that's what we do in towards at Climeworks. Now answering what the Swiss Re would say partnership has brought to Climeworks. Mischa elaborated already a little bit on the inspiring role, of course, of this deal. I can only share this. After this, we saw indeed more and more requests, people wanting to do something similar like Swiss Re. That's true. I think what we can add on top of that is that the fact that this procurement and investment was coming from an insurance gave also a lot of credibility, because we know that insurance do due diligence, are risk averse, and so on. So it gives, I would say, a lot of credit to the solution we have been developing, because it was studied, it was tested and checked by an insurance and a very large one. So I think that's the point of top that differentiates, I would say, again, what has been done by Swiss Re than what we have perhaps from other customers.
Have you seen interest from other insurance companies as well?
Yeah, of course. We see interest from other insurance companies. We have, for instance, with the company Zurich contract, and we are in discussion with other ones for purchase, and perhaps also in the future for investment.
So, Mischa, there's a lot of interest on how you can use your core business and involve that with carbon removal. And you showed on the slide different ways you can engage, and it's all very early. And we see some new players like Kita in the UK that set up a new product to actually ensure pre-purchase of carbon removal. So that means where the buyer would make an upfront payment now, but the carbon will be removed later on. For example, because Climeworks needs to buy it to build their new plant first in order to remove the carbon. So in that case, they would insure the buyer, basically. Like if Climeworks didn't actually deliver, then they would pay out or make something else. And then you can also insure the carbon storage, which would be different. The pre-purchase is just that the carbon gets removed, and then like if there's a leakage or something like that, it could also be insured. So is it something that you started looking at as well, or like how do you view creating new projects like this?
So certainly we have started to look into the novelty aspect of removals as well. And this is, on a workshopping, sandboxing level. It's not that, the first products roll out. It's not that, we would only look into how to secure or how to back up non-delivery risks, for example. I show you on that map that there is a lot to also look into in the technology space, into transport questions that arise. The latest that will be answered is this question about climate liability, although this is also something of the most valuable to buyers of carbon removal services, because they buy that in order to make a claim, and they need to protect that claim ever after. So every year, essentially, they would have to go and demonstrate that carbon is still stored. So that's in the ideal world how it's supposed to work. And you could back that up with an insurance solution, where you have a yearly renewal, and you decide either to pay then the premium of next year, adjust it for current market prices. Then you also price in where carbon markets go in the future. And eventually you decide whether you want to continue, stick to that credit, plus the premium that you will have to pay next year, or replace that credit by a new credit that you consider to be over time more economical for you. So that is things that are under discussion, but I would not expect to see that super soon on the market, because insurers, it's an industry we look into. We need we need to have a loss history in order to understand new things and feed our models. And long tail risks are very critical. Okay, so something that's stretching far out in the future, we need to find a way to slice and dice that.
No, definitely. And the long term is also something that's interesting from just the contracting here. You have a long-term agreement, and we just mentioned pre-purchases where customers pay upfront. So Laurent, I'm interested in hearing like these kind of things where customers either pay upfront or they also make commitments to purchase for a long period of time. What kind of difference does that make for you as a company to be able to scale up?
Yes, it's correct. Our customers are having prepayments at the beginning of the contract. And I would say it's great to see that most of our customers accept quite easily these prerequisites, and we can go in such kind of agreement with all our customers. This makes a big difference, I would say, on two things. The first one is in finding investors. When investors are seeing that we not only have contracts, but there is a financial commitment already at the beginning from our customers, it of course improve the business case and help us to get good financing conditions. And from our side, of course, in terms of cash flow, it helps to develop our technology, to actually pay the development of our plans. So in terms of cash flow, it's also extremely important to go fast in the scale up. So this is, I think, something which is very important to scale up the industry. Something a bit new compared to the world of the offsets, where we were paying for ex-post credits. That's a really new setup that people need to live with. I think it's independent also of the type of carbon dioxide removal. It's more or less the same for each type of carbon dioxide removal. But I would say the acceptance for this kind of contract is quite big, and that's a good news.
Laurent, maybe if I may, so not everybody accepts that super willingly, because there is this risk of non-delivery, and I just want to make the listeners aware as well that we do that because we're at such an early stage of this new solution and of this market. Working in a full-fledged market like we have it by now for IPPs in renewables, so independent power producers in renewables, you don't necessarily need that. All you need is to have that contract in place from a creditworthy off-taker in order to get the finance then via lending streams. You make your capital costs, of course, cheaper if you have more upfront payments, and that might in turn make the whole contract a bit cheaper for the off-taker as well. But measuring that currently is still super difficult. But I would move the situation rather towards a contract only exposed one, because then it's also clear from buyer's perspective, when the credit comes, I can make the claim, and if it doesn't come, I'm not at risk. So I would not just embrace that as this is the way we're going to ever after purchase this type of services.
Yeah, you are right. I think it's because we are working with pioneers like Swiss Re, like other companies, are wanting to do an extra effort, but to make it really mainstream and having potentially each company going for offtake, we'll need to have also a solution for each of those requirements from other companies who perhaps don't feel to be really pioneers.
And in terms of being a pioneer, Mischa, did you have any resistance internally? Like, what were the challenges that you faced implementing this, being one of the very first to buy this new weird thing?
Yeah, it's a bit two-sided. So it created a lot of excitement, also because we had dedicated people, the dedicated team, storytellers. We took the CEO as a very first thing to Hinwil, to the first pilot of Climeworks, that you can touch and feel what this is. And that helped a lot in terms of the buy-in. Afterwards, it was a lot of convincing work, that we get the narrative in place and the understanding of the whole matter that's at stake. So, yeah, there are resistances all along the way. Okay? You should just not give up. I always thought that you run into closed doors. It's not the case in a pioneering company like Swiss Re. You just have to know how to open.
So we're getting in, some of the questions that we asked now are being asked from the audience as well, but we're getting in audience questions already. So let's just keep them coming. One is, like, if you had to advise someone else that wanted to start a similar journey, Mischa, what's the thing that you would say? Like, how can you get started? What were the first steps that you could take?
Yeah, I would always cover the funding question first. And that is very helpful. You should start this climate journey by how much am I currently willing to pay to afford? And you have to clarify that question really early on, because it's one thing to excite somebody about the new topic and then ask for a one-off budget and then go and spend it. It's another one to do that over 10 years and to secure the funding over these 10 years. And carbon pricing, for example, is a very good means of asking this question: how much are we willing to pay? Because if we announce a carbon pricing policy today that is designed for 10 years, it will be hard to undo that. While if you just ask every year for a new budget, there might be hundreds of reasons why a budget flows one year and the other one it doesn't. And with that, you can't really engage in the market meaningfully over a 10 years or 15 years time span. So ask yourself how much you're willing to pay, and then ask yourself, how am I going to deploy this money most meaningfully? Not so much the 100% needs to be compensated question in the forefront, but how much to pay and where do I spend it most impactfully, even if that's only 1% of your emissions.
Perhaps to complement on this, we really try to inspire our customers to do the same as Swiss Re, also on this internal carbon levy. Also because having a high one is of course a huge incentive to reduce our emissions. That's something which is quite automatic. Once you have a high price, you of course try even more to reduce your emissions. And I think that the last point, which is also interesting, is that it prepares the business model of the company to future taxes on CO2. And that's also very important, that you have a resilient business model that is prepared actually for future taxes on CO2. Today, not a small fraction of the CO2 emissions are taxed, and in the future it will be much more. So if you have already an embedded price on the carbon in your business model, your company is more resilient for future changes in this regard.
Yeah, totally agree. And something that I work in my work as well, pushing companies to adopt this. WWF has together with BCG, a great blueprint detailing how companies can do this, setting targets, but also using this kind of internal carbon tax and then funding solutions. It makes it easier if you don't have to. Now Swiss Re is already doing this carbon compensation claim, but still having money to buy direct air capture at a high price point. But if you have this kind of budget, then you could more easily spend it on the high quality solutions as well. So
to our defense, Robert, this is a bit the old, accounting world where we come from as well. I gave a tip that we are not necessarily, we follow it, but we still want to stick to 100% is compensated at every moment of time. I also think it makes sense because the 90% we're doing now in terms of avoidance means we do beyond value chain mitigation and we help others to reduce their footprint as well.
Yeah. So we got an interesting question about, for Mischa, is this something that you would see Swiss Re doing yourself, continue it? You were one of the early adopters, so you did this agreement with Climeworks. Would you consider joining Next Gen or Frontier, which are coalitions with companies that are buying carbon removal, or do you think you will continue by yourself?
No, actually, Next Gen is almost an invention by Swiss Re. So we discussed Next Gen with South Pole from the beginning because we were in a business relationship on offsets anyway. And we decided that we need an intermediary to help us do this type of work that we did with Climeworks. We spent, we had 3 lawyers and sourcing managers and whoever, 6 months engaged in this contract. We can't do that with 30 more suppliers. But what we want is one intermediary, middleman, and another couple of other co-buyers actually to increase our own market signal and to make our, just one more contract with an intermediary than 30 more such surplus. So we are already part of Next Gen and invite everybody to join such buyers club. Doesn't have to be that one, but the buyers club make a lot of sense. It alleviates the free rider impression, right? Why should I now pay so much and another one waits, profits from the lower prices next year? So that's a very good thing. It's a good common story to tell.
That's great. So we got a few questions on the tech. So like, what does it cost to remove 1 ton? Like, how much energy does it take? Is this something you want to comment on, Laurent?
Yeah, I can comment on. Yes, so we have a price point on the ton of CO2 today that you can find on our website. It's something between 800 and 1,000 euro per ton of CO2 approximately. What is important here is to say 2 things. It's a price point today, and this price will evolve with the next generation of plants. So yes, it's expensive compared to other solutions, but of course, what is important, the speed at which we will be able to reduce our cost and make our customer benefit from this reduction of cost. And that's why we are in a race to develop the technology, a race to increase the size of our plants to have scale effects and reduce the unit cost of this CO2. We think if we compare to other industries, like the solar industry, the wind industry, or even the battery industry, there is no reason that we cannot be on similar learning curves and cost reduction curves. So we are very optimistic that we have a lot of potential to come down, but it will take some time. We need also to manage the expectation. We will not be able to cut by the prices by 2 next year. We need to ask a little bit of patience to our customer, and I think we should also be able to deliver what we say and not be too aggressive and not to promise the moon when we know that it's an industrial process. We need time to build plants, so we also need to be sometimes a bit not conservative, but I would say transparent and really speak about figures that are achievable. So we are at this level now. We have an decrease of the price, which will be possible in any case, and we think that we can be in any case at a price which is very competitive in the future.
So another exciting question here is how will Swiss Re deal with its clients? Is this something you're transferring to your business partners as well? Do you foresee a time when you will only insure clients that has a net zero plan, or is that feasible from a business perspective?
So maybe one has to explain quickly, there are three different accounting worlds in our company. One is the real economy emissions, that the producer of whatever good has or lives in, and that's our operational emissions only. The other one is financed emission. It's its own accounting system where you attribute financed emissions to an investor. And the third one is insured emissions or insurance associated emissions, where you attribute certain real economy emissions according to the insurance covers pointing to those real economy emissions. And we're just at basically last week, we launched the first international standard on insurance associated emissions measurements and reporting. And we are at these hours discussing our first target setting protocol as an industry within the Net Zero Insurance Alliance. How do we use this information, the first time that we can measure these emissions and translate that into climate targets? So that's a bit the journey where we are. Not really, we know that Swiss Re can, as a company, only be net zero if the world is net zero, because we insure half or even more of the world as a global reinsurer. That therefore, if we say we're going to be in our full value chain net zero by 2040, we would lose clients completely. They're gone. But what we have to do, like everybody, take clients with us on the journey of transition. And obviously, there is a strong push towards alignment that clients set their own science-based targets, not only that we have one.
Yeah. So another question is around what is holding companies back? So there's not that many buyers of permanent or expensive carbon removal at scale. In this CDR.FYI, we're tracking the purchases, and last time I checked, I think it was 20 companies that bought more than 1,000 tons of high quality CDR. What do you think? I'll ask both of you. What is holding other buyers back?
Yeah, that's of course a good question, and we try also to understand this. I think you need, of course, there are a lot of factors, I think, influencing the purchase decision at the end. One of them is for sure the maturity of the climate strategy in the companies. There are a lot of steps to be done before coming to the point where the organization has understood that carbon dioxide removal is important, that carbon dioxide removal of a high quality is important, and they decide to attribute a budget to this. So it's something that takes time to mature in an organization. Depends a lot on the teams and on the vision of the company, but that's something that takes a lot of steps, I would say. And somehow it's normal that not all companies worldwide have already reached this maturity in this low level of knowledge on the climate action to be interested to play this role of pioneers. That is clear. And then, of course, there are different segments with different ability to pay. What we see today is that the companies engaging the more are the companies which have a nice ratio between the emissions and the profits, so a small unit of emission by unit of profits. That actually the companies that can relatively easily achieve a net zero goal without affecting too much their profits. And that's great that we have those companies today helping us. And I think the more we go forward and the more we are able to decrease our price, that we see more companies perhaps with higher emission or lower profit proportionally being able also to engage on high quality carbon dioxide removal.
Yeah, but that group is not so small though. Just 2 weeks ago, a report that I wrote for Carbon Gap, we looked at precisely this and could see that the companies that represent around 85% of the profits only have 15% of emissions. But if all of them were to implement a carbon price like Swiss Re for their emissions, then we're talking about about $30 billion per year going to climate projects. So, I mean, which is more than 10 times bigger than the whole voluntary carbon market. So is today. So it can still be substantial, even if the big emitters didn't sort of get involved.
Oh, well
Mischa,
done for your report, Robert. We read it with a lot of attention, and you're right. I think that's a lot of money which is available there, and what we need to do is exactly what we do today: is to communicate with those companies, to reach them and make them understand that they have an important role to play in this discussion.
Maybe one thing to add, Robert, there is also a miss currently. So a lot of people are looking towards a science-based target initiative in order to find answers. What is a good climate plan for me and what not? And there is unfortunately no real guidance on the topic of beyond value chain mitigation and the role of removals before the state of net zeros, before the target year, when the condition is clear that you need to neutralize or make negative whatever you still as positive emissions. But there I'm certainly, looking at them to become more vocal, so that I never ever hear again the word, but this is not eligible under SBTi, so I don't do it.
Yeah, no, that's important point. I also heard it a lot from companies that, no one is telling us to do this, so we won't, like at this point. So definitely these kind of third party actors are super important. So there's still time for some more questions. If someone wants to put it in the Q&A, we have some questions here about more for clarification. So are you just offsetting your scope 1 and 2 with direct air capture, Mischa, or how do you organize this sort of accounting wise?
So just to remind, the scope that we cover is all our direct emissions, scope 1, and all our scope 2 power emissions, and then material parts of the scope 3 upstream. And this is flights for a service company like Swiss Re predominantly, but there is also stuff that we don't even measure yet, like non-is embedded carbon in the buildings, the services, the professional services, like if we hire a consultant, what is the emissions that we then have in the upstream? So we need to expand that scope even in our own operations still, but we do cover everything where we report. We cover that in terms of our 100% compensation.
Yeah.
And again, this is our operational footprint. For the financed world and for the insurance associated world, there will be other schemes. Offsetting doesn't play a role in those two accounting systems. They're the same. They're accounting systems in themselves. So what you can do, but these accounting rules need to be set out first. If you still insure positive emissions, you can insure negative emissions in order to balance. Or you say you insure only net zero companies in order to call your insurance portfolio net zero. So that these rules need to be laid out first. But buying as an insurer offsets or removal services in order to compensate insurance associated emissions, that's not possible.
Yeah. There's one more question here around Swiss Re. Did you have to build new expertise in the company to be able to do this, since it's quite sort of far from your normal business, dealing with technical things like direct air capture?
Yeah, absolutely. So our risk engineers, these are the ones who really study the underlying risks in depth. They need to catch up with new things like Climeworks. We, of course, also hope that if we have a partnership, a strategic partnership with one of the most advanced players in that field, that we can have exchanges, that we are closer to those risks than if we would just observe the market through some brokers. So that needs to be built up, but it starts also earlier. It starts in the procurement department, in the legal departments, of course, the CSR, so the sustainability people need to catch up. But that we see. So I hired interns 3 years ago, and there was nothing in the CV, and every year there is more removal expertise coming in those CVs, which is absolutely great.
Yeah. We're out of time, but just a final thing. What would be the call to action or message to the industry that you, Swiss Re, would like to share, building your experience with Climeworks? And maybe also from Laurent, what's your call to action for the ones that are listening?
Do your best, remove the rest, and then walk the talk.
It's well summarized. I think it's a really time to act, and the companies having the means to do a step should do it now. We really need the private sector to accelerate the scale up of high quality carbon dioxide removal. All
right, great. That's a good wrap up. So thank you both, and thank you to the audience for listening and coming in with questions. I think Mischa answered some of them also via text and in the Q&A, so you can check if your question was answered. Yeah, and hope to see you soon again.
Thanks for having us. Thanks, Robert.
Thanks a lot. Have a good evening.
Bye-bye.
See you. Bye.